All right, welcome back to another episode of the Growth Capital Podcast. I'm your host, Justin Dixon, and today we've got Noah Starr, CEO of Tracked IQ, on the podcast. This is a very interesting podcast for me because I love talking to entrepreneurs, but also I love talking about commercial real estate investing. And so he started his career in a large corporate finance role, but then shifted a few years ago into starting his own commercial real estate self-storage investing business the same week that he actually got engaged. So we talk about kind of his preparation from going from a W-2 employee to an entrepreneur and support that is needed around you to kind of make that be successful. And then we talk about his journey from being a commercial real estate investor to actually finding a product that he was using in commercial real estate, realizing that this product had legs and had the ability to actually be a standalone company. So he acquired the technology, and now he has spun it out into Tracked IQ. So we talk about that transition from owning a real estate investing company to owning a SaaS tech play. So very, very interesting episode. So let's get Noah on the pod. Interested in hearing conversations with private equity leaders, CEOs of private equity-backed companies, and startup entrepreneurs where they share their stories about their career journeys, starting, investing in, and scaling successful businesses, and the important role that having the right talent plays in building a successful business, then you are in the right place. Welcome back to another episode of the Growth Capital Podcast. Here's your host, Justin Dixon. All right, Noah, welcome to the podcast. Thanks for being on, man.
Thanks for having me, Justin. This should be a lot of fun.
Yeah, no, I'm looking forward to it. So you and I know a little bit about each other, but for the audience and people listening, maybe share a little bit about who you are, what you're up to, and where you're located.
Sure. I'm based in Austin, Texas, and my beard isn't nearly as good as Justin's just yet, but I'm getting there. I'm the CEO of Tracked IQ. It's like Zillow, but for self-storage properties. And before that, been a real estate investor, based in Austin, Texas. Here, live with my wife, my dog, Cody, and very passionate about entrepreneurship, business, new ideas, all sorts of things.
Awesome. Well, I want to obviously dig into the Tracked IQ thing. Obviously, being the CEO of a business is obviously one of the reasons why I had you on the podcast. But we share a passion and interest in real estate investing, and so I think that's kind of a good way to start the conversation a little bit about graduating college, and then maybe talk about your early career, quickly, and then how did you get into the real estate side, and then we'll obviously pivot into Tracked.
Absolutely. So I graduated from the University of Texas at Austin in 2017. Now been in Austin for just over a decade, but I'm from New York originally. I studied economics and business, and after school worked in finance and real estate private equity, first at a large private credit group in Dallas, Texas, where we financed essential assets across real estate, aviation, general equipment, etc., and then moved to the equity side to work for a large real estate private equity firm here in Austin, Texas. Was super, working a ton of hours, got super burnt out, and always wanted to be an entrepreneur. So in April of 2022, I left my private equity job the same week that I got engaged and the same week that I launched an investment company. So that took me on a crazy journey, which culminated in Tracked IQ. But, initially started in self-storage and acquired about 700,000 square feet of storage assets across Texas, Tennessee, Arkansas, Michigan, and Ohio. Had institutional investment partners and had a really big problem on the data side that led me to Tracked IQ. But there's a lot to unpack there, but it's been a pretty awesome 2.5 years being an entrepreneur.
Well, I guess I got to first start by you quit your job to start an investment business, which I did a very similar thing. But you also, got engaged in that same time period. So how did the newly fiance, feel about you, quitting what seemingly is a very stable job in commercial kind of real estate and private equity space to start an investing business and all of that?
It's funny. I remember how nervous I was when I was sharing the news that I was going to quit my job and launch an investment company with my father-in-law. Mm-hmm. And, he had the same reaction that my wife did, which was obviously that's something you're going to do. And obviously you're going to succeed at that. I've been talking about being an entrepreneur since middle school. And, there was a very thoughtful, methodical process by which this string of events just happened. I didn't decide to get engaged that week. That was a 6-month planning, right? Didn't decide to quit my job that week. There were 6 months of planning, preparation, meeting with my mentors, underwriting properties outside of the office, all sorts of things. So it was really just a bizarre culmination of so many meaningful events in one week. But yeah, it was pretty exciting, and she was super supportive.
Yeah, I mean, having a very supportive partner is probably one of the reasons why you're successful now, is because you were able to, kind of take that leap, and you had somebody that was believing in you by your side. Um, you know, there's probably some entrepreneurs that are maybe in a position where you were, where they're working a W-2 job. Maybe they thought about the entrepreneur path, and they just don't want to. They're maybe like me. I was very risk averse, right? And so they just don't want to take that, plunge into the unknown. Like, what did you do? Because you said it was like a 6 month kind of process. So maybe walk me through a little bit about, like, what did you do with you and your girlfriend at the time? Like, what did you do to kind of get to a point where you felt like, okay, this is the date. I've got I've got the financial nest egg stashed away, so if shit hits the fan, I can still, survive. Like how did you prepare for that leaving the corporate job and cutting that cord?
Yeah, it's a great question. And I think there's a lot to say on the preparation piece of this. I'll also say entrepreneurship is not for everyone. I think it does take a certain kind of person who's willing to deal with the stress and anxiety. And you mentioned how important having a great partner is. I'd say, that goes to the point of there's no such thing as, being a self-made person. You're lifted up by who's around you. In terms of the preparation for me, I had a really good background of institutional investments at two really large companies. So I knew exactly how to underwrite properties, how to model them, how to build an investment criteria that I thought made sense for institutional investors. And, so there was a 6-month process where in September of 2021, I had just worked from, 5 a.m. to midnight for a couple of weeks straight. Was super burnt out. I was talking to one of my mentors, and put a plan in place to acquire value add self storage properties within 4 hours of my house. And that's a lot simpler when you kind of break it down to the kinds of investments I had been working on previously, which were multi-million dollar, even billion-dollar partnerships. Just something within 4 hours of my house that is, mom and pop operated self storage facility. How could I go about buying that? And, that really, working with my mentors, underwriting sample opportunities, building my own Excel model, I took a very tactical approach, which is, okay, my first property probably needs to be less than $1 million. If you're going to buy $1 million property, what does that actually mean? It means you're going to raise a $600,000 or $700,000 bank loan. Well, the lender is going to care about, debt service coverage ratios. So when you're looking at a storage property, obviously we want to make sure the purchase price allows you to hit that. Okay, cool. If you're hitting that, how can you then convince some other investors to invest $300,000? And that comes to, cultivating an investment strategy that I thought was made a lot of sense, growing markets, stabilized facilities with upside, all sorts of things like that. So it was a very tactical approach, and eventually found a property that checked all the boxes. It was 600. We bought it for $640,000. So, a $500,000 or so bank loan and some equity from people who knew me. And that kind of was the domino effect that triggered me realizing I can go find more properties that are similar. And it got bigger and bigger and bigger. And to when I actually left my job, I had a portfolio of opportunities that I can walk into that had been months in the making.
Got it. So you essentially built your your side hustle during your day job, so that you had a little bit of a, call it a cushion or something, where you weren't just like starting from scratch day one, right? And that's what I think, the best way, if you can swing it to start a business, is to start it while you've got a big company, or somebody else paying your bills, so that you can burn the midnight oil, and kind of build it on the side until it hits a certain threshold. Maybe that's not covering your salary, but at least you've got some income coming in, or you've got some traction, that you can, hit the ground running kind of day one when you kind of jump out. Um, the raising money is never an easy thing, especially as a first time entrepreneur, especially as a first time in the real estate world, kind of in that kind of finding deals on your own. How did you find that for your real estate deal, like that first one? Like obviously 650K of a purchase price, you didn't have to raise that a ton of money, but you still had to raise some capital. How did that first kind of raise go, specifically on the real estate front?
Yep. And then I want to come back to the point you just made because it was a really good one about how to actually create the scenario that makes sense.
Yep.
But it was very tactical and it came from the experience I had drawn. For instance, I knew that if you found a mom and pop self storage facility located on a road with high traffic counts, it's historically been fully occupied with rents below market. That story resonates with a lot of people. A lot of people are looking to make those kinds of investments. And you throw on myself, who, I like to think I have a pretty good character and I'm honest and transparent and trustworthy, and super hardworking across the board. That's a recipe for an interesting investment opportunity. And what's even more interesting than that is the structure by which I was raising funds is actually a really accretive structure to invest in compared to other investment companies, because my leverage point is so much different, where since I couldn't say I have a track record of 10 years on an average return of 25%, my preferred return is going to be higher. My promote structure is going to be worse. My fee profile is going to be worse. So some of the really savvy investors who didn't know me as well realized that I found a really good opportunity. It's self-storage. We're going to find a good management company to run the facility. And the actual structure is more favorable than if I invested with a BlackRock, right? So
Right.
that was
You were taking less because you needed to get that first deal, prove yourself, and then you can obviously, eventually, if you wanted to, flip into a more equitable model for you, and also a more traditional model for an investor.
100%.
Yeah, got it. I guess talk quickly about kind of the scenario that you set up, because you said that was kind of an interesting kind of for you, was maybe an interesting or inflection point.
Yeah. It's funny when I think back to when I actually quit, right? The fear was actually much lower the day that I quit than that 6-month period prior, where I had no control over my life. I was working ridiculous hours with no upside in any of the things that I was doing. I was trying to balance, what am I going to do with my life? So actually working all day at a company job and on the side, trying to figure out how to create a scenario where I can jump into a very positive scenario, that was actually way harder than jumping, because I had already built the scenario that made jumping actually a relief of getting out of that corporate, side hustle scenario. So I think a lot of people tend to think about, how scary it is to leave your corporate job. I think it's really scary to be beholden to large companies who don't really care about you versus controlling your own destiny.
Yep. I mean, we could talk all day about my opinions or opinions on kind of the safety, I'm using air quotes, of being in a big corporate company. I've worked in startups. I've worked in big companies. I've recruited for them, and it's you're a line item on a spreadsheet. And if they need to, especially if they're publicly traded and they need to make their quarterly numbers, what's the easiest thing to do? And that's a reorganization. But that's for another day. So this is not a real estate specific podcast, but obviously I think that is we needed to set the table, because obviously the company that you are the CEO of, Tract IQ, is directly related to your commercial self-storage investing business. So talk us through the process, because it is a unique story because you didn't develop the platform, right? You're not a tech founder, and you didn't develop Tract IQ. So maybe talk through how that all came to pass, and then we'll talk more about kind of where you guys are now and where you're going.
Absolutely. So the biggest problem that I had as an investor was finding quality, accurate data that I can go to my investors with and know it was right, know that it was painting the full context of the opportunity. And what ended up happening, and what ends up happening at all big real estate investment companies, is you have a team of analysts doing a ton of manual work, trying to find all the nearby residential construction sites, all the nearby commercial construction sites. How are the rents moved in the market recently, and what do you think your rent, your underwritten rent can be? All of these things are based on data that historically hasn't been very good, in my opinion. So it kicked off an initiative to try to figure out this problem. How can we build a tool internally to help contextualize our opportunities and underwrite more efficiently? We stumbled onto a company called TractIQ, which was built in 2021 in partnership with a data company and a gentleman who unfortunately passed away. So we actually, as we were trying to find data to build our own tool, we actually found this product that was sitting there for years, no investment, no real management, but it was an incredible underlying product. And the moment I saw it, was blown away. So we actually ended up acquiring TractIQ originally to bolster our investment company. And what ended up happening, which is I think the best way for a startup to know if you have product market fit, is we had this onslaught of demand immediately. Once when people heard that I had bought this product, they started checking it out and realizing that it's actually way better than any of the existing solutions in the market. So we raised a little bit of money, we added some more firepower to the team, and then realized that the opportunity for TractIQ was actually bigger than just investing in real estate. So publicly and privately committed to no longer buying facilities in favor of just building TractIQ into a really, really good and quality data company.
And so, okay, so you actually kind of made the conscious decision to kind of put the investing business or your time in the investing business on hold, if you will, and so you are 110% focused on Tracked IQ because you see that as a maybe a force multiplier above kind of maybe just investing in deal after deal. Is that right?
Yeah, and had I known that I would stop investing in real estate at the time we bought TractIQ, I probably wouldn't have bought TractIQ. It
Mm,
was just because that wasn't the trade-off I was ready to make, nor did I see the potential. And that's, when you think about product market fit, I wasn't even convinced that this was the right product. It took me a couple of months to realize what we had here. And, you know, leveraging that with my industry expertise as the customer
yeah.
created a tsunami of events that is now culminating in our team at Tract IQ, and why I feel like we have an incredible opportunity to really take the uh, data industry and storage by storm, and across the board. So it was a really interesting series of events, especially when you consider how a lot of people just like to come up with startup ideas and go
Yeah.
find pockets. We were just industry experts that had this problem, and we were the customer, and that gave us a huge advantage and a little bit of luck to find this platform, all culminating.
Yeah. And so when did you kind of cut the cord with your investing business to go all in on Tracked IQ, and then where are you guys right now in the evolution of the business?
Yeah, we bought Tract IQ in March of 2024. We probably realized that we didn't want to have a conflict anymore. And it was probably in May or June of 2024 where I committed to no longer buying properties. We still have an existing portfolio, but eventually those will be sold off. And now 95% of my time is spent on Tract IQ. So it was a really interesting transition, and I'm super grateful for the experience there and all the investors who supported us pre-Tract IQ, and now we're growing pretty significantly at Tract IQ, and it's been really fun.
And how is it kind of similar or different running, leading a real estate investing business, which is, a little bit more hands-on, where you're going out and seeing properties, and there is a little bit of a roll up your sleeves, whereas building a SaaS business is maybe a little bit different, but or maybe not. Like I've never done both. So maybe talk through the similarities or differences you've experienced, starting and building your investing business and then buying Tract, and now you're the CEO of Tract, and you're you know moving forward in that business.
It's way different. It's way different, and I think it really helps to have incredible partners, Marina and Ethan, who are experts in the software and product side of things. But moving from real estate to tech was a huge shift, and I'm still learning so much, but have a lot of really wonderful mentors and advisors, and read a lot of really great books to help me through the transition. But, fundamentally, real estate, there's a lot of risk in every investment decision that you make. Even if you have all the appropriate data, there's still inherent risk in the market. And after you do a deal, that doesn't help you do the next one. You have to go find the next one. There's fee differences. There's all sorts of things in that business. In SaaS, every customer you sign, hopefully next year, 90% of them sign again on repeat. So it builds and builds over time, and it scales and scales over time. But there's a lot of other challenges with a SaaS company than an investment business, especially if you hire third-party management companies to actually do the operating on the day-to-day.
Right, because when you're doing an investment company, you hire people or companies to do the management, so you don't have to hire that staff, right? So and obviously there's outsourced opportunities with SaaS as well, and all that fun stuff. But all right, so it's been we're recording this in the end of 2024, so it hasn't been a full calendar or full 12 months since you acquired Tract. So maybe kind of if you can share any data on kind of where you guys are and maybe what the outlook looks like for you in 2025, and then we'll unpack some other stuff.
Absolutely. So I guess publicly, we have tripled our revenue base since we bought Tract IQ earlier this year, have signed and partnered with some really amazing companies such as Marcus and Millichap, Cushman and Wakefield, JLL on the brokerage side, and then a lot of investment companies like Nuveen, 10 Federal, Spartan Investment Group, etc., have become customers of ours. And next year we plan to change the game with some additional new data sets that we're making available to our customers. So it's a lot of fun trying to solve problems that I've complained about for years. And now time to put money where my mouth is and actually be the one to solve those problems. So it's been a lot of fun, and I've never been more excited or optimistic for what we're working on here at Tract IQ within the self-storage world.
And you've talked a lot about self-storage. I guess, some of the data that you've talked about like new development and traffic patterns and things like that could be applicable to other areas of real estate. Is that also kind of an opportunity to grow, if you can share, if that's like a path of, kind of not just being so focused on self-storage, but, being able to access it if you're like myself, before I was a multifamily focused person, right? And I cared about rents, I cared about traffic, I cared about developments and all of that.
Yeah, I'd say for now we're solely focused on self-storage. There's a lot of big problems that we're solving, but of course, longer term, our platform is super scalable, and the underlying data, doesn't matter if you're industrial or multifamily or storage. Demographics and traffic counts and flood zone maps and all of these things are relevant to you as well. So certainly, there's an opportunity for us to grow. But right now we're hyper focused on self-storage.
Yeah, that makes sense. You talked about kind of the team and having a good team around you, in both of your stints, at your investment company and then obviously here at Tract. So maybe talk about the evolution that you've seen and the types of talent, kind of personas that you need to bring in and bring around you as an entrepreneur, whether you're starting a business or acquiring a product and then building a business around it. For any entrepreneurs that are listening, like that are maybe they're a one-man band at the moment, but they know, they want to grow a business. And so how do you think about talent when you're trying to scale?
Yeah, I think Warren Buffett says, stay within your circle of competence. There's another phrase of, stay within your zone of genius. Forget who said that one. Maybe it was Naval or something like that. But, the way I think about it is I have a certain skill set where I was a really good real estate investor. So, there are certain skill sets that brings to the table, but, operations, SaaS, managing accounting systems and payroll and all these other things, you need to solve and find someone really good to be able to handle all those efforts, which is where Marina comes in. On the product and development, and actually who can write code. That's not going to be me. I can tell you the ideas that we should have in the product and, talk about the data and data integrity. But having someone like Ethan, who came over from Google as our head of product, managing our engineering team, right? It's just plugging holes for what your weaknesses are so that you can really focus on your strengths. If the company is going to be dependent on my ability to code, even with ChatGPT, we're not going to be successful. But if you can find people to really solidify all of your weak points, that is what can separate you and elevate your team.
Yeah. And I guess, looking at kind of the next year, or like I said, we're recording this in December of 24. So, people are planning and building goals and things for 2025. If we jumped on a podcast between, next year or a year from now, and caught up, what do you think is going to happen in the commercial real estate space in general? Because obviously you've been an investor in it. You're obviously tied into it just with Tract. So I'm just curious to get your thoughts on just the overall commercial real estate world, but then also, just in general, as you think about the appetite in the SaaS and the M&A space, because obviously you're probably talking to investors, you've got people on your board. What's just your sense on, what 2025 is going to look like? Obviously, you've got a very clear crystal ball, so we'll take it all. We're recording this, so we'll see how good you are.
Well, as an economics major and a former / current investor in real estate, you can argue that I am a credible source on making predictions. But as Warren Buffett says, predictions are pretty much meaningless. And I think Charlie Munger has a really cool talk on this as well. I don't generally make predictions. I think if you look at any predictions or the vast majority of economic predictions on what interest rates are going to do since 2021, I think all of the leading experts have been wrong time and time again. Obviously, we've had a serious macro event with inflation and a presidential election that can indicate or alter certain policies. But I have no idea what's going to happen next year in terms of the stock market or interest rates. All I am focused on is driving forward our product to be a 10x better than anyone closest to us so that we can provide elevated service for our clients. And, I feel like if we do that, we will be successful regardless of the macro environment. But I don't really have much to add on like how things will impact future commercial real estate valuations.
Fair enough. And I guess, have you guys seen your product or kind of competitive products kind of leveraging a more AI driven models to provide similar data, rightly or wrongly? I'm just kind of curious, AI is obviously, top of mind for a lot of people. How are you seeing it within Tract or within the data world within commercial real estate?
It's a really interesting question. I think, I definitely have a front row seat. And I'd say, the AI is only as good as its data. So that's why, we're investing so much into data is once you have a quality data set, there's endless applications for it. And in the AI space, there's obviously a lot of things that we can do so long as the data is right. But if you put garbage into the AI, garbage is going to come out. So that's where data quality and data integrity and data transparency is really our focus. And we'll see what the future holds for how AI can impact commercial real estate. We're certainly working on some stuff.
Awesome. Well, we will stay tuned to see how that goes. I know we're running up here to the end, but I've got a 3-pack of questions that I ask every guest, and so we'll jump right into these. First question: what's the most influential business book that you're into right now?
Yeah, Warren Buffett, An American Capitalist by Roger Lowenstein is one of my favorites. I've read it a bunch of times. I actually go to Omaha every year for the Berkshire annual meeting.
Nice.
And which interestingly, as I went from an investor to a tech person, obviously people think about Steve Jobs or Bill Gates or Mark Zuckerberg or Elon, et cetera. But Warren Buffett to me has been one of the most influential people, one of the most inspiring and knowledgeable folks. So definitely a really good read.
Awesome. I'll have to check that out. All right. Next question is, what is your favorite thing to do outside of the office?
I love spending time with my wife and friends. I do work out quite a bit, or at least I'm trying to a lot more. And then I read a lot. There's a nice, one of the many bookshelves in my house but very much attribute a lot of my success to reading a lot.
Are they all business related books, or do you have like a passion around something different?
I definitely have a sci-fi
Okay.
obsession, in addition to all of the 500 plus page nonfiction books that would bore most people in society.
Fair enough. Awesome. Last question. Favorite vacation spot?
Favorite vacation spot? I love spending time with my family in Long Island. My parents live in West Hampton Beach, so that's a really good place for me and my wife to go visit.
Definitely want to, you can, escape the July and August summer swelter here in Austin and head out to Long Island. It's probably a better place to be than here in Austin.
The biggest trouble I've had with Texas is the summer heat, so that's been part of my way to cope.
Yeah, no, fair enough. I've talked to a lot of people. They go to like Colorado or Utah for like literally the both months of July and August. So not a bad strategy. Awesome. Well, no, this has been great to kind of get to know you more and learn about your journey into commercial real estate investing, and then obviously CEO of Tract IQ. If people want to learn more about Tract, or if they want to get in touch with you, maybe they've got questions, maybe they want to be they're where you were a few years ago. What's the best way to connect with you?
Yeah, you can visit our website, tractiq.com, and then I'm very active on LinkedIn. You can just look me up, Noah Starr, and hopefully I'm posting some interesting things, but you can always message me there and we can get together.
Awesome. Yeah, we will put all that stuff in the show notes and make it easy for people to reach out. So Noah, man, it's been great. I really appreciate the time. Thank you very much.
Thanks so much, Justin. I appreciate it.
I hope you found at least one actionable insight from this episode of the Growth Capital Podcast, your one-stop shop for insights from private equity leaders, CEOs, and startup entrepreneurs on starting, investing in, and scaling successful businesses, as well as the role having the right talent plays in growing a successful business. It would be greatly appreciated if you would rate and review this podcast. And if you're watching on YouTube, please like and subscribe and drop us a comment so we can expand the audience of this podcast. Thank you for all your support, and don't forget about upcoming episodes dropping every Tuesday.